morning and welcome to Flashpoint. I'm Lauren Rowe. Thanks for joining us. I'm going to begin this show by saying I'm so confused. And you are going to agree with me. What does this fiscal cliff mean to me and to my family and to my community? And what should I be doing right now in the last few weeks of this year with all of the uncertainty going on? Well, when I have questions, I have this panel of experts that I can just pick up the phone and call. So I thought I would invite them over here today to answer all of your questions that you might be having at home. Isn't that great how Flashpoint works? I get all you special people to come in here and give free advice to my Flashpoint viewers, so it's fabulous. Joining me here on the Flashpoint panel discussion this morning, I have Dr. Sean Snaith. He is the director of the University of Central Florida Institute for Economic Competitiveness, a nationally recognized economist in the field of business and economic forecasting, an award-winning forecaster, researcher, and professor. He applies academic expertise to solve real-world problems, or your problem, while on Flashpoint. He has served as a consultant for local governments and multinational corporations like Compaq, Dell, and IBM. Beth Cassib writes a business column, well, not anymore. Now she writes just a straight-up everything column at the Orlando Sentinel. She focuses on everything now, but you still do focus on real estate, tourism, business development, schools, the economy, the elf on the shelf. This mom over here can handle anything, and I'm really enjoying your new column, so we're happy that you're here today.
Thank you.
And Tom Ruggie is joining us here today. He is the CEO of Ruggie Wealth Management, a certified financial consultant, a certified financial planner, and a 21-year veteran of the investment and financial planning industries. He began his career by founding Ruggie Wealth Management in 1991. He serves individuals, small businesses, and nonprofit organizations. In 2009, Tom was honored by Florida Governor Charlie Crist with an appointment to the board of the Florida Prepaid College Plan, and is now its vice chair. The plan manages almost $10 billion in assets and serves over 80,000 college students annually. And we will talk schools and tuition today and what kind of future that might be for some of those families out there that are worried about paying for kids' education in a little bit. Okay, Sean, it sounds so scary. The fiscal cliff. And now news this week that we may not have a decision or an agreement or compromise before Christmas. What exactly does this mean? Is it really as scary as it sounds, or we in the media are making it sound?
Yes and yes. You know, I think if we were to actually go off the fiscal cliff and if everything that's scheduled to expire in terms of the tax cuts, the Bush tax cuts, payroll tax cuts set to expire at the end of 2012, at the beginning of 2013, there's across-the-board spending cuts. If all of those were to proceed as they're currently written, it would most likely knock our economy back into recession. So, I mean, that is a scary prospect, but it's avoidable. Will we avoid it? It remains yet to be seen. I think we're going to tippy-toe up to the edge of the fiscal cliff. We're all going to get a little economic vertigo before it's done, but I just can't see us doing this, self-inflicting another recession.
Okay, and I'm going to put you on the spot, which is something you hate that I do here when you're on the Flashpoint panel, but what do you really think is going to happen? What kind of compromise do you think is going to be met given your expertise, or is it really just impossible to figure out what these politicians are up to?
Well, I think there has to be some sort of compromise. I think it will be an extension of the current law to give more time to actually address the larger issues. There's just simply not enough time to really solve the long-run deficit and debt problem that we face in this country. I mean, these are difficult problems to solve, and it's not going to happen in a matter of weeks. So I think both sides are going to realize that they're going to have to buy more time. What does that mini deal look like? I think it remains yet to be seen, but I think it will be just to kick the can down the road and buy more time to come up with this grand solution that's been so elusive thus far.
But buying more time, Tom, I want to switch over to you. Buying more time does not necessarily solve the problem for you or your investors as they spend the next 3 weeks trying to make decisions on how they finish their end-of-year financial investments or tax preparation and how they move into the next year. Because a lot of decisions have to be made at the end of the year.
That's correct. Yet, you know, first of all, I agree with what Sean's saying. I think they are going to come up with some sort of minimal agreement going towards the end of the year and then kick the can down the road, if you will, another 3 months or 6 months. But most of my clients and most people I talk to believe if they do that, that the changes are going to be retroactive anyways. So to your point and your question of do we have to do this end-of-the-year planning? The answer, especially for certain clients, is yes. And the biggest thing that we're seeing in our practice is estate planning because of favorable gifting laws that are applicable now. But the second thing is capital gains. It's expected capital gains rates are going to go up, and for higher tax brackets, it's potentially going to go up significantly. So we're proactively looking at clients and saying, hey, do we need to sell these assets and pay taxes now so that if we sell them at a future point, we avoid a higher tax rate? And a study that I looked at analyzed capital gains rates, and if you're at 15% bracket now and you're paying 23.8% next year, there's a 9-year break-even period. In other words, if you do not sell those assets now and it transitions to a 23.8% rate, you actually would have to hold the asset for 9 years to be favorably ahead.
And I promise I will get to Beth here, but I told her that I'd lean on these guys for a few minutes to talk about the numbers. But Sean, what kind of effect is this having on our economy, though, as Tom's clients and pretty much everybody out here gets either more conservative or makes drastic changes to their portfolio based on all of this uncertainty? I mean, this does have an economic impact, even though we don't seem to be seeing it at Walmart or any of these other retail stores. I mean, people are still flooding Macy's at like midnight. But I'm just wondering, what kind of economic impact does this uncertainty have, especially with the people that might be in the higher brackets of portfolio with Tom, and these are the economic drivers in our society?
Right. Well, first of all, I wouldn't get fooled by the Black Friday behavior and the lines that we saw there. That doesn't necessarily reflect on the entire holiday shopping season. So whether consumers are going to spend the way they were that day for the entire shopping season remains yet to be seen. But the uncertainty you're talking about and financial markets, I mean, obviously there's an impact there. If people don't know what's going to happen or don't know the timing of what's going to happen, we could start to see some selling accelerate as we get closer to the end of the year. And so that's going to have an impact on the stock market. Again, could erase wealth. That has effects on consumer behavior as well. The bigger picture of uncertainty, it's not just the fiscal cliff, it's how do we solve this problem long run. I think it's impacting hiring. I think it's impacting investment. I think a lot of businesses have been in wait-and-see mode for a long time. And until they start getting answers to some of these questions, they're going to be hesitant to pull the trigger on these forward-looking type decisions like investing, like hiring. And so it dampens overall economic growth. And this quarter, when the data comes out, we're likely to see GDP growth around 1%. So we are really at a real tepid pace of growth. We don't need any additional burdens like uncertainty weighing down on this economic recovery.
And Beth, you have a unique perspective because you were a business columnist for so many years and spoke so candidly and personally with all of these business owners, and now you're out in the community seeing the effects of how our economy is either driving or not driving the bus, so to speak. So what are your thoughts as you've now kind of branched out a little bit more and you're seeing the effects of whether business is doing well or not in your neighborhood?
Well, certainly people are doing better than they were in the depths of the recession. I think most of us would probably agree with that. But the uncertainty is the thing that really, really hurts. People don't know how to plan, and they don't know how to look ahead. I think that a lot of local businesses are seeing some boost because the housing market has kicked up a little bit. I don't think we can say that we're out of the housing crisis completely. We've still got a lot of foreclosures to go. A lot of people are still really low on equity or have no equity. But it was actually a news story a week ago that more than 50% of the people in Central Florida actually have equity in their homes now, and that wasn't the case. Right. So
was that not on the front page? I don't remember seeing that.
It was. Yes, it was actually was on the front page. So there certainly has been improvement, but this fiscal cliff, a lot of people, they don't understand it. They're concerned, they're intimidated by some of the language they're hearing out of Washington, and I think that just adds to people's overall
Well, and it even
unease.
comes down to what people's tax return is going to be.
Absolutely.
How much am I literally going to spend at Christmas or Hanukkah or whatever holiday based on what check I'm going to get in the mail come March? I mean, just those specific questions make a huge difference in the next few weeks. All right, I'm going to take a break because I'm going to ask these experts here what we should be planning on doing in the next year. Should you be saving more? Should you be investing more? Should you buy some real estate? What should we be doing with whatever little tiny bit of savings we have left? We'll be right back here on Flashpoint.